Welcome traders to this review of August 21st, 2018, and I'm going to build upon the idea that I had introduced in the previous video from yesterday and review a larger time frame chart. Again, the only indicator that I have on the chart is the zigzag ZTP. But after doing a little work, I've decided to change the deviation points to 2.5 instead of 3.0. What we see in the overnight session is a strong trend reversal trade, and it brings up a point that I get asked a lot, and I get asked a lot why I don't use time bars. And as you can see from this trade that started about 8 p.m. and ended about 7 a.m., the time is basically irrelevant, and we form one move up and we get exactly what we are expecting, and that is a pullback to minor support. In a strong trend reversal trade, we trade from the blue counter trend support down here to the blue counter trend resistance up here, and then we reverse to minor support, which is this small green line right here. After touching the minor support and starting to trade up, the order flow identified a POC extension trade, and at the two areas where we would expect to see some resistance and give us a possible reason for an exit from this trade, we didn't see any POC sell signals, and that's either at this test of a high or at the blue counter trend zone up here. When we reached the eventual top here at 69.75, we formed a ZTP order flow sell signal along with the POC absorption and a POC extension sell signal. And the combination of those three signals is an extremely strong signal. But the problem is we are in a strong trend trade, and that makes that type of trade a high risk. This is what the 150 tick chart looked like, and it was a much cleaner chart to look at. At the high here, this is where we had the ZTP order flow along with the POC absorption and extension signal. The market trades down approximately 7 ticks and then trades back up to test the high, making an exhaustion pattern. This is my definition of a lower risk trade on this test, and at this point this is where we developed point of control extension and absorption trades. We also developed a point of extension trade here. Now, the real reason I wanted to make this video is because this will be the third video on the subject of accumulation or distribution. We had a clearly defined entry here at the exhaustion trade, and we again had a clearly defined entry at this trend short trade. This is what the order flow chart looked like. Again, as I referenced in the previous videos, what a accumulation or distribution chart does look like is the bouncing between the red and the green. And as you can see, when price trades down, we see the appropriate red signals. And I would note up here that we have extremely high delta strength numbers. As we trade down to the lower end of the range, we again see buying. Trade back up, we see selling. Now, what is different about this chart is that we see POC extensions on top of POC extensions, forming an extremely wide area of resistance up here all around 28.69, both above and below. In this area where you see the extension zone getting redder, that is more extension zones being created upon an already existing extension zone. What we see down here on support, which is slightly different than the previous video I did identifying a distribution, is we do see 3 POC extension buy signals. What happens immediately after each of these POC extension buy signals is that they are taken out, the price trades back up, and we again see high delta strength numbers and we see high volume. Now, my opinion on this is one of two things. If we are short from back here or over here, and we were going to keep that position, we would just want a very tight stop, because when this price, if it were to trade higher, there's going to be a significant number of contracts that are going to have to get reversed and stopped out, which is the main reason why we would want to be involved in this trade, is that we are going to expect a strong trend to develop out of it. In the previous video, we only saw absorptions down here, and in this case we are seeing extensions being created, which is slightly different. But as you can see, what happens is this last POC extension is also combined with a ZTP order flow, and I realize that might be a little bit hard to see, and we have numerous ZTP order flows here and again back here, which we don't see any on the buying side. What happens is the market does sell off, it does form a strong trend, and at the low we create a POC extension buy with a stopping ratio. Now, because we've created a strong trend to the downside, this is not necessarily a buying opportunity, but it is definitely a reason to exit a trade. If there's going to be an entry into this trade, it would be done over here as price comes down and tests the intermediate support and minor support area, and then trades higher, creating extension zones in these two price ranges. There were a total of 3 different extensions created on that bar. The following bar had a total of 4 different extensions created, and the bar following that with the POC extension buy had 2 more extensions created. Going back to the larger time frame chart, the first area where we would expect to see some sort of resistance would be the intermediate resistance zone here. We saw absolutely nothing, and we saw absolutely nothing until we reached 2872 and the counter trend resistance zone. At that point, we had a legitimate reason to exit when a POC extension developed. As you can see here, the POC extension developed on extremely high volume, and it also developed with a extremely high delta strength number. All of these would be good indications that the trade should probably be considered to have been taken off. What ends up happening though is, as price trades down, we trade into a POC extension buy, and the price does trade up to 2874 when another POC extension sell signal is given. At this POC extension sell, I would consider this a high risk trade to take at this point, because I don't have a good stop to give to this. As we could see in the previous trade, after a POC extension was given, we traded 2 points higher on the strong trend. And the second reason would be that we are likely only to get between 2 and 3 points out of that trade, as the trade trades back to the minor support zone, which again is that same pattern we saw this morning, where we trade blue to blue and return to minor, as we see right here. At the low here at minor support, we create a POC extension and absorption pattern. However, for the same reasons as before, which is a limited reward and a risk that would take us all the way down to 2868, I would argue that that is an inappropriate risk reward. What would be an appropriate risk reward is, as we trade to the intermediate resistance zone here at test of a high, we developed a POC extension signal at that point and entered that trade. What was very interesting again is that as we tested that previous low where the previous buy support had come in, the market did react, but it did not give us any POC buy signal. And additionally, it did not give us a POC buy signal as it traded here at 2869 at the counter trend support level. At the strong trend support, what we saw is, after the price traded there, we came back down and we tested that low, we created a POC extension there. What that looked like on the 150 tick chart, again, that first low is here and it's making a strong trend, which we would define as high risk. As this traded to the exhaustion pattern here and we create a POC extension, we then define that as a lower risk. Price traded up directly to a known ZoneTraderPro pattern of tick divergence. We noticed that the tick was only 323 here compared to 381 before. And as we reached up here, we again created a POC extension sell trade. As we traded back down, we created a POC extension buy down here. And as we traded back up to here, with now just 30 minutes left in the market, we created another POC extension sell. So we can see what happened with that. The market sold off sharply into the close, giving us about a 7-point trade on that. This is what that back and forth looked like on the order flow chart. Here's the first extension buy at the test of the low. Here's the extension sell with a stopping ratio, followed by an extension buy along with a ZTP order flow, followed by a POC extension sell signal here on top of already created multiple historical resistance zones, similar to the buy signal that was down here. As the market traded down and this area of consolidation broke, not until we got to the bottom at 63 did we have a POC buy with about 15 minutes left in the market. I want to thank you for watching this short video, and I hope this helped your understanding of both the need for a higher time frame and the example of the distribution that occurred earlier this morning. As with yesterday's chart, I'm going to include the 4 slides which define all of the ZoneTraderPro patterns that you saw today, along with the definitions of the zones that you see in the chart. Thank you very much, and if you have any questions, please feel free to give me a call.